Hi everyone, my name is Vishal. Today is the 3rd of March 2024 and I'm going to be going over my weekly predictions for SPY. As usual, we'll go over the monthly, weekly, and finally the daily charts, and then I'll switch over to the Excel sheet to then go over last week's prediction and then obviously review the option chain for this week and finalize the week's prediction. So, how are we going to be doing? Before getting into this video, it's important to make the disclaimer that all information here is completely educational, and therefore it is important to make sure that you conduct your own analysis before entering a position in the market to ensure that you're comfortable with the level of risk and obviously the level of final reward that you get out of any single trade. With that out of the way, let's get straight into the video. Monthly charts, we can see the past 4 months since February just concluded have been very, very bullish. However, we can see that the volume is steadily going down, but it was rising for the first few months, and then the month of February, which had one of the largest real body candles, was actually declining on volume compared to previous months, which is showing that this strength may be weakening. Although we haven't seen the conclusion of March yet, we can't predict on it. The RSI is still going up along with its average, so we don't really get too much from the monthly charts. However, as we switch over to the weekly charts, we can see this price action in a lot more detail. Now, here we can see that starting here where the trend started, the price action has consistently gone up and made new higher lows along with the RSI. RSI has done the same, since we can see here. However, we can see there's a clear divergence with the volume, which is a very, very negative signal considering the fact that the market is in an uptrend but the volume is going downwards. It's a very strong indication that it's losing its strength, and there is an imminent reversal. And this is definitely the case, which is why we are being very, very careful for the past few weeks. It is because of this possible imminent reversal. For this reason, it's important to set an effective support and resistance. Since the support here would be the low of the candle at 504.75, which is approximately 504.75, which is the low of the candle, is approximately at an 8-point difference. And we do expect the market to go upwards, obviously, since it has continued, and we do expect the trend to continue until it doesn't. We do have to be safe and set a resistance of at least 4 points, since if the difference between the low and the close here is 8 points, then we do need to have at least a 50% difference from there. So we will set it at 517 points as the resistance here. So 517 points is approximately here we can see as the resistance from the weekly charts. So finally, let's get over to the, and since I'm at it, I will actually edit the Excel sheet since it is now updated. So the high here is 517 and the low is at 504.75. So the Excel sheet we can see here is inaccurate, since here the resistance now needs to be 517 and the low here is 504.45. So with that out of the way, let's get into the daily charts. Here we can see that again price action has been largely erratic since from the 26th, start of the previous week. It was in a sideways pattern with a doji here and sort of a greystone doji, although its shadow isn't long enough, but it is still a doji. So we had two dojis here, which obviously shows market indecision. And then, however, the last day did have a strong upwards movement, which was why we had an upwards movement overall for the week. But we can see from the daily charts that this was not the case throughout. And the market did actually end up staying in this defined range for the whole week, and it didn't move too much at all. Volume, however, did end up increasing throughout the week, which is a good sign, and which is why we did still end up placing our resistance or our buy entry closer to the spot price than the supports, because we do expect the trend to continue. And in the event that it doesn't, we still do have a stop and a sell entry as well. That's all we can get from the daily chart. So now let's switch over to the Excel sheet and review last week's prediction. So prediction 39 here, we can see that we did have no trade last week since it only closed above the predefined resistance on the last day, which means that we wouldn't have taken a trade. And although usually this means a strong bull trade for this week, the volume declining and causing a divergence is definitely a hindrance. We can see that currently for this week, no trade yet. We wait and we buy when it crosses 517, sell when it falls below 504.45, target of 1%, trailing stop loss, and target or stop loss isn't hit. We take the closing price on Friday. Max OI for the weekly expiry is 510 for CE at 32,926 and 470 for PE at 57,931. And this isn't right. This is not true. The weekly PCR is 3.17, highly overbought. Monthly expiry CE is the same, 494 at 54,673, and 410 for PE at 276,806, with a monthly PCR of 3.23, and the weekly and monthly trend are both up. With that out of the way, we obviously don't have a trade this week yet, but we will be covering any important events that happen this week. But for the most part, that's all for now. Thank you for watching, enjoy, and I will see you in the next video.